So how might the market digest tomorrow's jobs data? And will a negative number take any of the positive gains we've seen in the last couple of sessions off the table? Joining me now is Keenan Hauke. He's the president of hedge fund Samex Capital Partners. Also, Jack
Sue.
Ablin. Good to see you. Jack Ablin is the chief investment officer with Harris Private Bank. Gentlemen, great to have you here. Keenan, and first of all, what are you both expecting? Keenan, you first, in that jobs number tomorrow.
Well, first of all, I wish we could say that we're looking at a situation where 150,000 or 200,000 jobs was going to be coming to the market, and not just this month, but every month for the next couple of years to get us back. But I know the market's looking for 20,000. We can do 20 or 30 or even 40,000, and it's going to be an uptick in the market. If we get some sub-number, as a slight decline, or there's a little bit of an uptick in the unemployment rate, the gains from the last few days might be taken away, as you mentioned a moment ago, but we'd be more inclined to buy that. We see an undergirding of some slow strength and quiet accumulation that's been building since its trading range back in May, and any sell-off would be an opportunity we would take tomorrow and into early next week as well.
Jack, what are you expecting? And regardless of what we see, do you see opportunity here?
Well, unfortunately, Sue, I've been disappointed with the jobs numbers since May. I was really pounding the table thinking that the jobs report would blow the doors off when I looked at things like temp hiring, the jobs hard to get survey, and a lot of the other measures that historically related very closely to job growth. And unfortunately, as you know, I've been essentially disappointed every month since that time.
Yeah, you took some money off the table back in June, didn't you?
Right.
And have you stepped back into the market? Are you at all encouraged by yesterday and today?
Well, unfortunately, I think come tomorrow at 8:30, everything that's occurred so far this week won't matter. And my concern is that while there is a seeming disconnect between a lot of the data I look at and jobs, one measure that seems to be directionally correct, unfortunately, is the ADP report. ADP, which is a prediction of private jobs, is negative. So my bias is still to be somewhat bearish, cautious on jobs right now, and unfortunately, that's going to hang into tomorrow morning.
Keenan, you said something very interesting just a few moments ago. You said there's a bit of momentum building.
It's quiet though. It's
quiet. Yeah, I know, and that's quiet markets worry me. How will you know whether or not it has any staying power?
But don't you know you never short a dull market?
I know you never
right?
short it, but this one is handing people their heads. It's just been very tough for people.
It has been, but there was from March of 2009 until the April 23rd high. I mean, that was a heck of a run, and maybe that built in expectations that it was going to continue for another 2 or 3 years, as most bull markets do. But look back to 2003, with a good run for 12 months, and then the market essentially took 8 months off. It traded in a range where it would go up maybe 6, 7, 8%. It would fall down 6, 7, 8%, and it would just get stuck there. And then by October of 2004, things started to free up. It started to break out a little more. And by the end of the year, we were back to races for another couple of years. So I think there's been too much bearishness. I don't know what the jobs number is going to be tomorrow morning. I'm a stock guy. I'm a trader. I'm an equity guy. I think that if we see the stock market sell off, it's an opportunity, and I believe that we will see more upward bias for the remainder of the year than not, and we could see some higher prices going into November and December.
Oh, on those optimistic words, I go to Jack. Jack, are you buying anything? I mean, are you looking at dividend plays? What are you watching?
Sure. Yeah, so the money that we took out of equities and redeployed, we are playing dividends. We own high-yield bonds. We own preferred stocks. So we're not completely out. I don't think I would suggest to you that we're just hiding under our pillows. But on the other hand, I don't believe that we're on the precipice of this multi-year bull market, that if I've got cash on the sidelines that I'm risking, missing out on some huge party.
Let me ask you, Jack, do you like corporate paper? Do you like corporate debt better than equities?
Yeah, I like corporate paper. I actually like the preferred stock of financials.
Okay.
With the Frank Dodd bill, that may be taking a lot of the ROEs out from under these banks. It will ultimately take a lot of the risk out of that sector. And so I don't mind flipping a 7.5% coupon while, nothing happens.
Okay. Keenan, you say you like south of the border or north of the border, right?
Yeah, I do. Actually, I was thinking about this earlier. It seems to me that the commodity trade, where we see the price of oil holding up, and a lot of other commodities that are either going to new highs or they're hovering right below them, it's the Asian play where these guys are going and they're buying. Who produces these things? We know Australia does, but Canada's a big provider, and a lot of South American and Latin American countries are as well. And it seems to be our indicators are pointing us towards, and indeed, those are positions we own. I do think they could trade higher over time.
All right, guys. Thanks so much. Appreciate it.
Thanks a lot,
nice
Sue.
to
Have a
see
great
you
weekend.
You too.